Let's analyze together the latest news and long-term analysis of Beyond Meat. But before that, read the disclaimer right here in the video description below, and also join us in ST live on YouTube. We analyze the best or most popular stocks, or sometimes both, of Wall Street and Europe. What we're watching right here is an insane, nearly more than 1500% in just 3 days. So if we go to the daily chart, you can clearly see the volume candles. The bigger the volume, the bigger the candles. If we compare this to the previous candles since the IPO, we are talking about the most trading volume in history in this stock, definitely over the last 3 days. And probably it's going to continue, maybe not, but at least we're going to study the move behind it, because this is very interesting. And I'm going to analyze the net income and the latest news. Why the net income? Because the net income right here, as you can see, is in negative territory, nearly minus 150 million of net income over the last 4 quarters, which is not positive, and probably the reason behind the stock is going very, very low. And also they are restructuring the debt right now. So this is the reason we saw a dip of minus nearly 83%, if I'm not mistaken, since those levels before the announcement. So many people, use this opportunity to buy the dip. This is a very classic strategy. I remember this happening with Hearth, back in 2020. And those who bought the stock at the moment, they enjoy really good profits. So it could happen again here if we analyze it correctly. This is the key point right here. The number one, a major distribution deal with Walmart, where Beyond Meat announced its product like the Beyond Burger 6-pack and Beyond Chicken Pieces will expand to 2,000 Walmart stores nationwide. So this was a key catalyst, definitely it is. Because we're talking about for net income and expectation. If I'm not mistaken, I would say they can get between 100 net income, 100 million, and 300 million. So if we compare those, new numbers, and we add them to these probably new expectations, the upcoming quarters, we're talking about they're going to enter into positive territory. They could enter into profits. That's a theory. Now we have to go to the practice. But in theory, they could enter into profits, which it never happened. It never happened before. And if we actually analyze the net income over the last, since the IPO, I don't see any positive quarter. Maybe at the beginning, right here, it's like, 4 million of net income back in September 2019. But apart from that, it never happened before. I mean, one here, 1.8 back in March 2020. But apart from those quarters, these 2 quarters, we never saw a positive net income in Beyond Meat ever again. So with this new deal, it could happen. So it's very difficult to predict what's going to happen, especially in the short term. So I would say if you believe they can enter into profits, obviously it's a buy, but at this point it's better just to wait a correction or buying the stock at the lower part of this trend. Having in mind right now there is a lot of hype, because the other reasons that we have right here, is this huge meme move right here, the short squeeze, because they were selling the short stock with over 60% of the available shares. So right now we are in the middle of a explosion right now. Also, they included the stock in the Round Hill meme stock ETF. So very crazy stuff right here that maybe for a long-term investors is not good. Probably you are waiting for a better strategy, which is to buy at the lower level, not during this huge hype move after nearly 1,500%. Still, the news are very good and very positive, because it's a huge deal. And I remember here in Spain, because I'm from Spain, I remember here you cannot find Beyond Meat products anymore. Even in the past supermarkets where you could see Beyond Meat everywhere, nowadays you cannot see these burgers available, which is very, very difficult to find them. Also, in the rest of Europe, probably it's happening the same thing. The only way you can buy a Beyond Meat burger, maybe it's in a few restaurants in Spain. So a very tricky situation, because before that, and we're talking about when that happened, was during 2021, 2022, the stock was trading way higher than the current levels. So it's a good step, with these new deals, but they had to do it in the same way in other stores, probably with this huge pack, I believe is very positive, because the problem in when you buy like a 2-pack burger, it's very expensive. You know, it's not worth it. But if you buy 6, you can save a few dollars. So that's good, you know. Especially if they sell it in a huge supermarket as Walmart, you know. Probably they could make good sales, and it could happen. They could enter into profits. So I like the product, by the way. I think they're very tasty, even though I also like, you know, standard meat. But the thing here is like they have a good product, probably one of the best. But they need to find good partners. They need to increase the sales, and they need to reduce costs. So obviously, by restructuring this debt, because this was probably one of the biggest problems with this stock, we go to the fundamentals that we see, for instance, let me see if I can load it. The financials, I cannot load it, okay? But the financials right now, they have a huge debt, and that's probably one of the biggest issues with the company. They need to reduce the debt. So if that goes successfully, it could be very good, you know. Actually, now it's loaded. So if we go right here, look at the debt they have. You know, it's not. If you compare this with Nvidia, you could see Nvidia has a debt that is similar to the cash, to the free cash flow, which is insane, you know, because they could pay the whole debt in 1 quarter, and that's it. They couldn't do the same. Hello, little cat. And they could do the same here. They cannot do it, and this is the biggest issue with this one. In order to see that, they need to reduce the debt. Right now, the free cash flow is minus 100 million. They are in a very delicate situation. But if they enter into profits, probably it's gonna happen in 3 years, 2 years, because of this huge debt. And that's the reality. I like the product, I like the products they have, but they need to increase sales, they need to reduce debt, and if they do it, they could enter into profits by the end of 2026, 2027, if I'm very optimistic. So for the short term, obviously this is very good, but the reality right now is like the hype can continue a little bit, you know, because obviously the meme move can, boost the stock a little bit higher. But have in mind right now the reality of the stock as well, which is currently they are in losses. In the next quarter, they're going to announce losses as well. So you have to be very, very careful. And also go to Walmart and see if they're actually selling the product. Because if you see they're, selling just a few, they want to enter into profits. So you have to analyze that. If you buy the stock, you have to buy at the bottom. This is the theory, obviously, and the practice, it should be the same. You buy it right here, and there's a higher risk because the stock could go down, for instance, to $1, and that means you go down minus 74%. So I prefer to buy at the bottom, but with this one, I agree with you guys. It's very difficult to buy it because look at this. It went down every time since July 2021. An incredible minus 91.9%. It's completely horrible. So I understand right now that if you want to buy the stock, definitely you need a stop loss because you cannot buy this for the long term. Yeah, you can do it, but it's like a very risky bet. So as I mentioned, guys, very difficult situation. Leave your comments below about what do you think about the stock. Do you think it's a buy? Do you think it's a sell for the short term and then buy around $2, $3? Leave your comments below, and we see you in the next video. And remember to subscribe.